All right, today we're diving into a company that, let's be honest, completely changed the grocery aisle. Beyond Meat. But behind that revolutionary brand, there's a financial story of some really epic highs and some seriously shocking lows. So let's break down the numbers and see what's really going on. If you ever wanted to see what a market roller coaster looks like in a single picture, well, this is it. On the left, you've got the absolute peak back in July 2019, with the stock just soaring at nearly $240. And on the right, well, that's where it is today. That staggering drop, right there, is the whole reason we need to take a closer look. So, how in the world did we get from that peak to, well, to here? Here's how we're going to break it down. First, we'll do a quick refresher on the company itself. Then we'll chart the stock's crazy fall. After that, we'll decode the financials behind it, see what the pros are saying, and then we'll zoom out for the bigger picture. Okay, first up, let's just remember who we're talking about here. Beyond Meat went from being this celebrated innovator to, honestly, a genuine market mystery. Beyond Meat is that California company founded way back in 2009 that really brought plant-based substitutes into the mainstream. You know, products like the Beyond Burger and Beyond Sausage, they didn't just appear in stores. They fundamentally changed the whole conversation around food. But that incredible success story has taken a really sharp turn. So now, let's look at the hard numbers behind this dramatic fall. And look, this isn't just a one-day crash or a single bad week. This is a sustained downward trend. We're talking a drop of over 23% in just the last 24 hours, more than 22% in the past month, and a massive 64% plunge over the last year. It's that consistent pattern that really spooks investors. Now, this number here, this explains a ton about the risk involved. We're looking at the stock's beta, which is 2.01. In really simple terms, a beta over 1 means a stock is way more volatile than the overall market. So, at over 2, Beyond Meat is essentially twice as volatile. That means its price swings, both up and down, are far more dramatic than your average stock. So this all leads us to the one central question that everything really hinges on. What is actually driving this dramatic drop? To answer that question, we have to look past the stock price and get under the company's financial hood. It's time to decode the numbers. Okay, so let's break this down. You see the company made over $326 million in revenue, which, sounds pretty great. But the crucial number here is net income. That's a loss of over $160 million. And the earnings per share, or EPS, which is basically the profit divided by all the shares, is also negative. So, to put it simply, despite all those sales, the company is losing a lot of money. And this isn't just an annual problem. If we zoom in on the most recent quarter, we see another warning sign. Wall Street analysts thought the company would bring in about $82 million in revenue. The reality? They earned just under $75 million. Missing expectations like this often sends a chill through the market. And it wasn't just revenue, they also missed on earnings. The loss per share was 43 cents, which was even worse than the 38 cents that analysts were predicting. Again, it's this pattern of underperforming against expectations that really worries the market. So that's the story from the company's own data. But what about the outside experts? Let's take a look at what the analysts are saying. You can think of it as the market's official report card. When you use all the technical indicators that professional traders rely on to analyze stock patterns, well, the aggregated conclusion is pretty clear. The consensus signal for Beyond Meat right now is a sell. And this is what those professional analysts are predicting for the future price. You can see the current price right there in the middle. Now look at the range. Some analysts think it could fall as low as 80 cents. Even the most optimistic target on Wall Street is just $4. Just think about that. Even that maximum estimate is a tiny fraction of that $240 peak we saw at the beginning. So with all this challenging data, where does Beyond Meat even fit in the market today? Let's zoom back out and try to get the bigger picture. Okay, this is fascinating. This slide shows us which exchange-traded funds, which are basically just baskets of stocks, are holding Beyond Meat. And it tells a really conflicting story. It's in a meme stock fund, which suggests it's for speculative traders, but it's also in a vegan climate fund and a food innovation fund. It's living in two completely different investment worlds at the exact same time. Yeah, the stock is considered a meme stock, a vegan stock, and a traditional food company all at once. This kind of identity crisis makes it incredibly difficult for the market to agree on what its true value should actually be. Okay, let's do a super quick recap of the journey we've just taken. We started with a truly revolutionary grant. That was followed by a dramatic, almost unbelievable stock collapse. We then saw financials that are showing a consistent lack of profitability. And finally, a pretty clear sell verdict from the market's technical analysis. And this all leaves us with one huge question. For a brand that truly revolutionized what we eat, what does its financial collapse tell us about the future of food investing? Is innovation enough, or does profit, at the end of the day, always have the final say? The answer goes far beyond just one company. Thanks for tuning in.
You remember Beyond Meat, right? Just a few years ago, it was the darling of Wall Street, this revolutionary company that was going to change how we all eat. But now? Well, now it's at a critical crossroads, literally fighting for its future. So let's break down their high-stakes comeback strategy. Just look at these numbers, because wow, they paint a pretty stark picture. You can see revenue peaked back in 2021 at over $464 million. And since then, it's been a steep, steady decline. This financial freefall is the core problem that's forcing the company to completely rethink its entire game plan. So the big question is, what on earth went wrong? I mean, this is a classic story of a company that went from absolutely meteoric growth straight into a brick wall of stagnation. And now they got to find a way out.
And look, this wasn't just one single thing. It was a total perfect storm. They're getting squeezed by intense competition from all sides. You've got rival startups like Impossible Foods, and even the traditional meat giants like Tyson are jumping in the game. At the same time, consumers who were once really curious, well, they're getting a lot more skeptical. And all the while, these stubbornly high production costs have meant they've just been consistently losing money.
The takeaway here is pretty clear. The party is over. That early, growth at all costs era where it was all about rapid expansion, that's done. The company is now waking up to a much, much more challenging reality. But they are not just sitting back and watching this happen. And that brings us to their comeback plan, which is a massive pivot for the company. The focus is no longer on just getting bigger, it's about the much, much harder task of actually becoming profitable. So, their new roadmap is this clear four-part strategy. First up, aggressively cut operational costs wherever they can. Second, simplify their product lineup. Get rid of the duds and focus only on the top performers. Third, boost the profit margin on every single item they sell. And fourth, bring in premium pricing, basically betting that you, the consumer, will pay more for a genuinely superior product. Their big, hairy, audacious goal is to become EBITDA positive. So what does that actually mean? It's a key milestone. Basically, it means the company's core business is finally making more money than it spends, even before you account for stuff like interest and taxes. In short, it's a huge sign that the business itself is fundamentally healthy again. So, what's their ace in the hole? Well, they are betting big, and I mean big, on their new BYND IV platform. Now, this isn't just a new recipe. We're talking a complete top-to-bottom reinvention of their products. It's all designed to perfect that taste and texture that has held some people back. They are really hoping this is the secret weapon to win everyone back over. Of course, having a great plan on paper is one thing, but executing it in the real world, that's a whole different story. And that brings us to the major headwinds and hurdles, all the risks that could easily sink this entire comeback plan. And right here, this is the central conflict. On the one hand, you have Beyond Meat racing to create a better, tastier, more appealing product. But on the other hand, they are slamming up against a tough market reality. Overall consumer demand for the entire plant-based meat category has really cooled off. And the challenges, believe me, they do not stop there. Inflation is a double-edged sword. It's driving up their own costs while squeezing everybody's wallets. Meanwhile, that competition is just getting fiercer by the day. And on top of it all, you've got growing concerns about the company's own debt. It is an incredibly difficult environment to try and navigate a turnaround. So, with all of that in mind, what happens next? Let's explore three possible futures for Beyond Meat. You've got the optimistic bull case, the more realistic base case, and of course, the pessimistic bear case. This table kind of lays it all out. The bull case, that's the dream scenario, right? Their cost-cutting works, the new products are a huge hit, and they get back to growing again. The base case is more grounded. They manage to stabilize the business, stop the bleeding, but they never really recapture that early explosive momentum. And then there's the bear case. This is where the worst fears come true. Demand keeps dropping, the competition eats their lunch, and the company just sinks into deeper and deeper losses. So, after all that, what is the final verdict? When we look at all the evidence, what is the most likely outcome for Beyond Meat?
Well, the road ahead probably looks something like this. The short term, let's say the next year or two, is going to remain very, very tough. Expect continued pressure on revenue. By the medium term, we should start to see if this big turnaround plan is actually taking hold. And long term, it's still a super high-risk bet, but there is some significant potential upside if, and it's a big if, they can pull it all off.
Ultimately, it all boils down to this. The entire future of Beyond Meat really hinges on two things. First, their own ability to flawlessly execute this very difficult plan. And second, a factor that's largely out of their control, a genuine recovery in consumer demand for plant-based products. They absolutely need both to succeed. There's no way around it.
And that leaves us with this final, powerful question that just encapsulates their entire challenge. After all the initial hype and all the recent struggles, is the world still truly hungry for what Beyond Meat is selling? Because the answer to that, well, that's going to determine everything.